You think you're giving the market room to breathe, but really, what you're doing is you're burning your account from the inside out. Today, I'm going to expose the hidden cost of moving your stop loss and why this single habit is silently destroying traders who claim that they are disciplined. By the end, you understand why moving your stop isn't just a bad habit. It's a slow financial and psychological death spiral. Hi there, if you don't know me yet, I'm Kojaks Pro, a swing trader, and I've been at this game for over 3.5 years. When I started out in my trading, I was making a lot of psychological errors that are very much repeated in this game of Forex, and that cost me a lot. It cost me a lot of accounts. It cost me a lot of psychological trauma when it came to reading the charts, when it came to actually learning this game and shortening my learning curve. It was until the point where I told myself that I needed something very reliable to lean on, which is a good strategy, a good trading edge, and most especially my psychology intact. I needed to embrace the psychology of profitability in this game. And the only way to do that is to revamp your mindset as a trader. You want to know one of the mistakes I was making that was costing most of my accounts? I'm going to tell you. And it's simply moving stops. I'll enter into a trade today, enter even multiple trades, and all of a sudden, the trade that I had been priorly optimistic about begins to, go against me. And what do you see me do? I begin to panic. I'll keep on monitoring the charts, obsessing over it, watching my funds go down until the point that my emotions were all over the place. What did I do? I began to tamper with my stops. Areas in the market or levels where I had planned to get out that constitutes my stop loss, I started adjusting and adjusting until I kept on losing a lot of money. That got me into the pattern of finding and refining strategies, because I was of the opinion that there is a perfect strategy whereby once I click that buy button or that sell button, the market should begin to go in that direction, be it up or down. That didn't help me. And the moment I changed it, it was a game changer for me in this game. So that's why I say, and I keep saying, that your mindset has a lot to do with your eventually becoming profitable in this game of Forex than your strategy. So at the end of this video, you'll know why it's important to leave those stops where they are. Let them constitute your hard stops. If the market gets there and stops you out, fine. You have risked a little. Go with the loss. That's the cost of doing business. That is data being made available to you as a trader to grow with. And that's how you eventually transition into becoming a pro trader. I'll be describing that in more detail in this video. If you've not already done so, subscribe to the channel now. And without wasting so much time, let's get into the video. First, let's call it what it is. Fear. You enter a trade, the market comes close to your stop, and then that sinking feeling begins to hit you. Instead of taking the loss, you move the stop a few more pips just to give it room. That's not room, that's denial. Most traders don't realize the moment you move that stop without a rule for it, you've switched from strategic trader to emotional gambler. Here's the math nobody talks about. You planned to risk 1% per trade. Your stop is set for that. But the moment you move it another 20 pips, your risk jumps to 1.5% or maybe 2%. Do that 3 times in a week and your compounding losses you didn't budget for. That extra 0.5% risk doesn't just hurt this trade. It throws your entire strategy off the window and your risk management in shambles, which means even your winning trades now can't cover the damage. Here's the deeper cost, and it's nastier. Every time you move your stop, you train your brain not to respect your own rules. You're telling yourself, the plan doesn't matter, my feelings do. That's how discipline dies, not in a blowout loss, but in doses of tiny, harmless tweaks. And once your brain knows you override your rules under pressure, it will do it again and again and again until your account is gone. And here's the kicker. The market doesn't care if you move your stop. It will hit it anyway. And now you've lost more money and more trust in yourself. So here's how you kill the habit before it kills your account. 1. Pre-plan your stop levels. They must be based on structure and not on feelings. 2. Set an alarm, not an auto close. If price hits it, review but don't move. 3. Track every stop move in your journal. The moment you see the pattern, you hate it enough to stop it. 4. Trade smaller size if fear is making you tweak stops. Moving your stop might feel harmless, but it's an invisible tax on your account and on your discipline. Respect your stop, not because the market demands it, but because your future self needs it. So let me ask, how well are you managing your trades? Is risk management a big issue for you? And if this is a serious part of your trading that you want to address, I want to see your comment and I'll get back to you as soon as possible on that. To help you further on your risk management journey, watch this video right here.